Somit, is astonishing. What a comeback that this particular sector has made over the last 2 weeks or so. But what's your take when it comes to the banks and the IT?
When compared to banks, if you see Nifty IT and bank have always been in the two other ends of the market. And that's the trend that we are seeing for the last 15 years, from 2008 to 2023. What we are seeing is that both the sectoral performers like Nifty IT and Nifty Bank performance has largely always been divergent. Like in 2009, Nifty IT index was up around 166%, but Nifty Bank index was up around 81%. This year what we are seeing is Nifty IT index is up around 25%, while the Nifty Bank index is up around 12%. So Nifty Bank has been an underperformer as compared to Nifty IT in 2023. So one thing that we have noticed here is that in the last 15 years, if you remove the COVID-19 years, that is 2020 and 2021, Nifty Bank has not underperformed the Nifty IT index for 2 consecutive years. So 2023 was an underperformance. So 2024 could actually be an outperformance for Nifty Bank going forward. Now, few factors that we are noticing here which could actually be in favor for the Nifty Bank index. Firstly, if you see the earnings growth for Nifty IT and Nifty Bank, most of the brokerages are expecting Nifty Bank index to outperform, but on a consensus basis, if you see bank index EPS is expected to marginally grow at a higher rate when compared to Nifty IT, not only for FY25, that is the next financial year, but also for FY26 also going forward. Ownership trends, if you see, as per November 2023 data, what we are understanding is that the FPI allocation in banks and financials have been falling for the 5th consecutive month. In fact, FPI allocation in IT has remained largely stable. And domestic funds, if you see, they have also decreased their bank and financial weightage to around 29.5% from 31% that we had seen earlier. And in the IT sector, if you see, in fact, the weightage has increased from 9.1 to 9.4. So another factor in favor of banks is underperformance from both FI and DI side, under ownership both from FI and DI side. And lastly, when it comes to valuations, IT index, in fact all stocks also in the IT index are trading at an expensive valuation compared to their historical averages, while bank stocks are trading at a lower valuation. Nifty Bank 12-month forward valuation price to book, that is, stands at around 1.9 times, while its 3-year average, 5-year average and 7-year average has always been around the 2.1 times, while Nifty IT index 12-month forward valuation, that is price to earnings here, is around 26.6 times, while its 3-year average, 5-year average and the 7-year average have always been around 21 to 23 times. So Nifty IT index is trading at a premium valuations. Now our managing editor Nikunj Dalmia also spoke about this, and he also gave his information on why IT has actually outperformed the banks. Let's hear his take.
The general assumption is that if US slows down in the short term, they will have to take a hit in terms of their visibility. Now the reason why IT is moving higher is because it did not participate, and these stocks are not at an all-time high. So the headroom for markets now to buy something which has not participated, or something where in a sense there is going to be this entire catch-up effect, I think is clearly visible. Now what do you look at IT? Well, there are 2 ways to look at IT. That's price to PE, not PB. Both stocks cannot trade at a price to book of 26 times. Where is IT trading? If one really looks at the IT stocks right now, well, IT stocks right now are not trading at levels which are below their historical average. They are just in and around there. Second, the AI threat, I think, is real. See, whatever is happening in US markets, I think that if the economy slows down in the near term, first there would be more, there would be more contraction, and then it's only in the second half of 2025 the repair will actually start. Surprisingly, IT Aisha this year has done much better than banks. Nobody anticipated at the beginning of the year that despite guidance cut, management commentary, delay in order books, no hiring, issue in terms of where the AI is going to be changing the business model, IT has done much better than the banks. And the simple logic here is that this is a complete contra trade which people are buying, thinking that this year the turn in a sense IT, the downturn in the sense for IT would be over. So I don't think from a risk reward ratio standpoint there is going to be big money to be made in IT here, in large cap IT services. Small companies, you got to pick your spots there. I mean, there are so many niche players, those companies are doing such individual things which are so strikingly different. That's a very different and a very, separate conversation. But in general, maybe I've got it wrong, or maybe that's the way I think. I think IT in a sense right now does not give you that kind of a launch pad for a great return for 2024.
All right, so that's the take coming in from ET Now, and ET Now Swadesh's managing editor Nikunj Dalmia on banks versus IT debate. But let's ask our experts which side of the fence are they. So let's bring on board. We have Kunal Bothra as well as Vivek Karwa joining us on the show. Very good morning to both of you. And Vivek, let me start first with you to get your analysis on banks versus IT. You had Soumit as well as Nikunj talk about it, especially Soumit saying the fact that the IT stock valuations are pretty high when you compare them to the banking stock. So keep that basis in mind. Do you think that this time around you'll have banks play a catch-up and IT take a breather, despite IT actually now playing a catch-up after a tad bit of underperformance through the course of the year?
Good morning, everyone. See, in fact, BFSI sector I have been recommending on every show since past 6 months, and even IT. Now, IT in October approximately it was at 30,000 levels, Nifty I.T index, and today it is at 36,000. So, which is almost 20% return. So, which is actually a good run for the kind of economy what we are seeing in US. And with again US getting downgraded on daily basis, and there was some negative rating recently also. There might be cap on the run what IT will see. But what I assume, if there is rate cuts, which would likely happen, because Fed was saying that they might do 3 or 4 rate cuts in 2024. If rate happens, then there might be some kind of confidence. But I'll still be more bullish on banking and financial services, because that really looks cheap for whatever the market has done till now. In fact, the large cap banks have not at all run. If you look at HDFC, ICICI, Axis, IndusInd, all these banks are still struggling, and I think 20-25% returns over there is not impossible. And if that happens, you can imagine where Nifty Bank index would actually trade. So I would definitely be more bullish on banking and financial services. That's again backbone of the economy. If economy has to do well, these companies have to actually do well. So any sector performing, the money is going to come into the banks. Now IT also, I would go in SIP mode. I'm not negative on IT. I'm also bullish on it, but I would go on SIP mode because it has already given 20% returns.
Well, thank you, Vivek, for that. Kunal, what's your view when it comes to Nifty Bank versus the Nifty IT index?
See, I would be both the spaces. I think Nifty IT index as well as Nifty Bank, both of them are looking attractive. We have to also look at the context of where the stocks or the sectors were in terms of the entire market construct. Both these sectors were the major reasons why the indices had not performed very well in the market breadth. In the large cap front was looking a bit more staggered, but this time around you've seen a complete change of trend for these large cap IT stocks and the large cap banking names, and specifically concentrating on the private sector banking stocks, as well as a formidable one from the PSU name, that's SBI. I think these stocks have come back into a strong bit of outperformance for themselves, or at least an outperformance of the previous behavior for themselves. So I would be bullish on both the spaces, and I strongly believe that the Nifty IT index, even from current levels, has more room on the upside, because when you see large cap stocks participating in such a kind of a gusto, we expect this to be a strong trend in the making. So I would be bullish on both the spaces, even on the Nifty IT index.
All right, so Kunal is putting his bucks on both of the counters, both of the indices, as Nifty Bank as well as IT expects a good outperformance from both of them going ahead. Soumit, let's see which camp actually wins.